there's the drive here. There's the drive. This is the seduction that we talk about. This is the idea of trying to get you to do something that you didn't want to do. They're trying actually to get you to do something you didn't want to do because you've probably got your sell-stop orders below here. So if you've got your sell-stop orders below here, -1 tick, for example, then that's exactly what they're trying to get you to do, is throw away your positions. They're trying to get you to throw away your positions by trying desperately and punting this downwards to try and get all the buyers off this trade. But obviously at this stage, we know that the game is on. We'd love to see it ourselves because we'd be able to buy at a lower price. We're not going to get taken in by the double Ds. We're better than that by now, right? Just because these guys want to take the price down doesn't mean we have to give them the luxury of getting us off the numbers. They might stop us at break even, but we'll just rejoin because we keep doing the same deal. The bubble was forming beautifully on the Grail trade here. We got the fight rich to the curve, watch for bonds testing new lows for bid watch. We got bond bid watch, break lower with volume, fight again, bid watch between 14.15 and 14.20. And we've came off the bottom edges twice for some really nice price action. Cracking trade, decent outcome. Pity we never got the bottom edge that we were wanting. You can see our paint wasn't quite right in this occasion. We were hoping that we'd get the sweep into the bottom edges. It just didn't play out that way, guys. So unfortunately, this is now pushed on. And we're now thinking to ourselves, okay, well, this might well be at 1440. We go for the next EXE candle, which is possibly going to be 1445. That would make a little bit of sense, wouldn't it? So we go for the 1445 EXE. And you start thinking that that's going to be the new scenario idea. We'll take this along to 1445. Probably it goes up a little bit here. And it may be more like that type of thing now when you're looking at it. So the hope is that this is how it's going to evolve. And we can work against that as a storyline. But not terribly sure that we're going to get that. We're not going to get that retest, are we? We just have to see what the cash open does with the monies. You know, obviously cash open could go bid, cash open could go offered, and that's going to put a big wrench into the bond. But at the moment, the bond looks bullish, but the 10-year certainly looks very bullish. So that means that I'm certainly still very bullish. Treasuries full stop. And you can see that the double Ds are telling us to sell the bond. And when the double Ds tell us to sell the bond, we buy the bond. We don't get seduced by the double Ds. Don't let it happen. Don't let it happen. It's there to cause us to do things we don't want to do. It's been telling us, sell the bottom edge, sell the bottom edge, sell all of these upticks. We don't want to do that. We want to miss out on this. But only if the 10's doing the opposite. If the 10's doing the same, guys, we want to go with it, right? We want to go with it. We follow them to the downside. But when it's doing different from the 10's, we want to make sure we resist the temptation. We step into that temptation and we meet it head on. And we just take the market bid off of these sellers. Don't be the sucker, guys. Don't get sucked into that deal if it's not right. Equities are doing their best. The Nasdaq's tried holding bids off the 360s. They've taken the dealer's key at 390 bid, RGL at the moment, and the S&P doing a little bit worse at the cash open so far, trying to find a bid off the prior swing low at 4407s, struggling a little bit, but so far so good. Oil, well, 85.20 was then traded, still blue side on the RGL. We said the RGL hadn't gone red, so the blue side RGL keeps us in the buy side of the trade. You may have had a couple of opportunities to grab a little couple of pops on the buy side reversals. We've now got a merging auction. We've had a failed auction sell and a failed auction buy just now, so that's obviously going to bring the the sweep into our thoughts. And if we're bullish, we know where that's going to take us, and if we're bearish, we know where that's going to take us. So this is what's happening on the oil just now. You can see it for yourself. You can see we're getting this narrowing into this area. That means that we've got a flush trade setting up. The flush trade will be, obviously, when we look at these, we know exactly where the flush trade is going to be on either side, and it's quite clear. We're quite clear about where that trade should set up. We can already recognize that the 25 looks reasonable now for the flush on the sell. So there's going to be your oil flush sell if you want it. And we already know where the flush buy is going to be, because obviously break of that 60 is going to take us to 50. And we're going to get the flush buy out of that 50 price. And that's now your bid offer spread on your oil, correct? So you get the flush sell above the 25s and the flush buy below the 84.50s. It just gives us that understanding into that narrative at this point. All good? Good.